Welcome to lesson 4, people. So we're going to go into GU and USD CAD. So I hope you digested some of the information from the last video. Gold, GBP AUD, broken down from top to daily so far. So here we have, again, just a quick recap. We're looking at price. Momentum is trying to find its feet. If we look at the past previous weeks, so we did break. We did spike and break 1.2 by 40 pips, pull back up, bullish engulfing 1-2 here, and then momentum pushed up to the upside, and then we don't really know what the hell's going on with pound right now. It's fundamentally based, but my bet is maybe upside. I'm waiting for a setup, so my setup is coming to life. I removed the box tool off here, but what we can see now is the hourly candle, has closed past the wick of the previous after making the bottom and actually stalling out in alignment with the 4-hourly. So the 4-hour spike down, it's just put its head back above the weekly here at 1.8365, and sorry, that isn't even a level, is it? Sorry, my bad. My eyes are now going from all of this recording. Anyway, oh no, it is a level. I'm just on the wrong chart. Anyway, looking at price coming up into maybe the daily region and then back down. So it's going to be interesting to see what actually occurs on that trade. I'm waiting for daily closure to go in and take that long. I believe that we could be in for, if you look at the scope, 8,430, 60, 70 pips. But when you're monitoring on 15-minute time frames, hourly time frames, it's easy in and out. From here to here, boom, money. Can we rebound from here, back down to here, new lows? A, B, A, B. So that's what I'm looking for there, guys. So obviously there's a lot more to that, which we are going to get through. Once you've gone through, I believe, if I look at my notepad right now, from lesson 1 into lesson 12, you should have a firm idea as to what is actually going on, and a firm idea of breaking down the chart from top to bottom, finding entries, so on and so forth. The rest is going to be management, and then looking at different trades that I have done and setups I record, market recaps, the week ahead, all of that kind of stuff that I am going to be throwing in the members zone. All of that is going to be building on your knowledge and giving you, so you have the foundations, and then from there onwards you're going to see live statistics, maybe some trades of mine, how to manage risk reward and position sizing, scaling, all of that kind of stuff. So let's get to it anyway. It's getting really, really late over here. All right, now day GBP USD. What we can see is critical junctions, critical levels. All right, similar to GA. Horizontal ray, body, body, bang, 1.2520. Right there, the high, you have the tweezer top and the bearish engulfing. So similarly to the Astro version 1, we can spot certain levels and key points based from candlestick formations, lower highs, higher lows, all of that kind of stuff. So that there is a prominent high. You can see drive 1, drive 2, drive 3, straight through 1.2550, more or less into the weekly area. I think the weekly area was actually plotted directly on that wick, so I'll just modify that to sit tightly on that. And then prices breaking down and so on. So that's our day. The next day, if I look at some of the other key areas, I think a key area for management can go here. What I mean by management, management in terms of, remember, was it the, it was the quarterly chart. Remember when I said there could be another drive into the low before the next leg to the upside? So because this quarter candle is closing in like 8 days, we can get a boost to the downside, and we can maybe even close similarly to this one or a little bit higher. We could have a pretty shitty end to the year. before going higher. So what we can do, we can use that area, that daily area, to actually manage any potential short positions that we are going to use this level to take profit, 1.2050. So we can use this level just to manage a short, or watch how price reacts if it does come into this region before rebounding. There's other things that I can see here which become evident on the 4-hour breakdown, which I'll do for you shortly. But yeah, I would use that one. Next one would be, if I look across here, so that's a gap down, market pulls back up, rolls, and then shoots to new territory highs. I would probably go for this one here because it's semi-mid-range. Yeah, it is definitely mid-range from here to here, here to here. I will stick with that. You can see that this gap, okay, if this body of the candle, if that candle body aligned next to where it should align, okay, that would be a clear area of body, body, then drive, then we can see price fly off that zone and into new territory. So that is a prominent area of support. If you want to try to pick a fourth one over here on GU, I would go for that right there. Again, gap higher, push lower. Nope, nope, too close. This one is kind of mid-range. So that's quite straightforward, to tell you the truth. Very straightforward. We have our weeklies there, we have our dailies there, and that is that, ladies and gentlemen. Other key points to recognize right now are even candlestick formations and general structure, what we can see from the past. So we know with the 3 month we can maybe spike into the lows, then come back up to the high. So we can maybe see something like this. This is how I would translate it. This is how it would be translated by the market. Maybe it could make a new low. So we have like 1 drive, 2 drive. We could maybe have a 3rd drive just to surpass this level. And then price dips its head back above this weekly, back above the daily. And then you're like, okay, cool. What I may then do is retest one of those levels. And then, boom, see you later. So then we have a clear price structure of drive 1, 2, overdrive, retrace, breathing again back above water. Right here we have a simple, I can see a 4-hour, actually I'm not going to confuse you with that, I'll get into that afterwards. But what we can maybe suggest is we need to think with our minds. We need to think forward as to how a potential candlestick may form. We have to imagine the wicks of the candle as well. A candlestick isn't just going to go open and just going to travel in one direction. It's going to have a wick first. So the wick is obviously the movement which it has been and done, but it's more evident on a lower time frame as we zoom in, zoom in, zoom in, zoom in. So this here could be the big ass wick on that 3 month time frame, on the quarterly time frame right there. Whoops. So imagine spike back in, similar pattern here, and then the market comes and boom, closes back up, maybe back into the region of this quarterly candle, or maybe even higher, who knows. On the month, this is what's quite important though. On the month, it looks like the area has already been taken. So coming into a monthly perspective, and then again, maybe the weekly is a little bit 50-50 to tell the truth, but I see either that happening there on the quarterly, if not that, my other scenario, just to throw it out there and just to again use my imagination in a scenario, would be weekly comes down, tests that daily level, so there could be a potential for a short setup on the 4-hour hourly. Then if we're on point, we could use that point of support there, the blue line, to then go and fish a trade to take long, maybe from, if it's going to go long, it's probably going to take out this level, okay, to go long into new price territory structure and maybe even higher than that. So we'll see. We'll see. The reason I favor this move right here is because of the price action blew through this area in which it was stalling for a while. It might need to come and retest that zone, find some liquidity in order to push higher. The market needs liquidity and volume to push higher. If it's done a trajectory move like this where it's coming to new territory, made a high, it most of the time will need to come back into this area. Again, we can use many other tools on the next videos to come and find its feet and find the money needed to pump it higher. So we could have gone from, looking at the structure, easy consolidation. Again, there's many gaps across here, but if I use that, take it to the highs, that could be an average. There's a few gaps as unequal candles, but using this, we have the price breakdown. All right, we have significant high, lower high, lower high, lower high, bearish engulfing, tweezer, lower high, tweezer, bearish engulfing. Price is breaking down, breaks down, comes into 1.2. Think about 1.2 fundamentally with Brexit. Okay, it's a massive area. If it doesn't come back down to 1.2, it's already done its business. The market's already, the business has already been done here. So if it remains above 1.2, okay, we now went from swing lows, okay, swing lows, swing highs, and then we've made our mark into 1.2. We can see the huge spike there. We know exactly what's happened. Money's come out, money's gone in. You can tell the money's gone in because of this, boom, massive momentum boost afterwards. So money's just sinking, 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 sinking. Consolidation maybe through news. It's had one last spike. This here, this consolidation zone is where money is coming out of the market from the shorts. The sellers, the money that's been driven, you know, into 1.2 to the fucking T over here. All of that money, a lot of it is now being taken out in this consolidation range. The consolidation range, again, it's now picked up some orders. Okay, so that's a gap. We've come back in. So this consolidation range, money is then come out. Okay, now what's happened is money has been picked up at 1.2, the psychological level, probably off the back end of some Brexit news, and then we can see the trajectory of this candle right here. The momentum is boosted to the upside. So reading what has actually gone on previous and now in the last few weeks alone, we don't have to go all the way back in time, we can see that one cycle has been completed, A to B, and now we've gone from A to B. But this B cycle, 2550 from 550 pips, that could be A to B. I don't personally think it is. I think that the A to B route is all the way up here, taking out these previous highs. I just believe that we can retrace first, like we've retraced here, before actually continuing the overall mission of where the money wanted to go and drive into. So I do believe that on this time frame, this daily, we can come into this area and then boom, ping off. So we can take advantage of move from here to here. But again, similarly to GBP AUD at the moment, we're not getting too much. Like what can happen here, the reason I'm saying, okay, potential long is because I'm reading price behavior and structure on the 4 hourly, mainly, and the hourly. I've just come into the 15 minutes to try to pinpoint an entry. I know that GA and its behavior, because this has been one of my pairs for God knows how many years now, can come into that region, still form a lower high, okay, below that, and then drop like a bitch. So that can also happen here on GU, but the behavior on GU is a little bit different. It's not as erratic. However, looking at that structure right there, if we go into the lower time frame, we can see this on GU. Small pullback, boom, drop. And that translates in the same manner as this. That's not to say that I can't take advantage of this to this if I spot it on a lower time frame. It's all about skill, it's all about confidence, it's all about, do you have the eye for it? Do you want to take that? Then if, let's say, because we do have that daily level right there, very, very similar scenario to GA, there you go, the blue level, because we plotted that first, we can then take shorts from here down to here. Once we are here, guess what? We can then take longs from here up to here. Tracking, this is what I was doing in August, and you have to be focused for it. You can't be half-heartedly looking at charts. You have to be focused for it, you have to have your levels plotted correctly to get as many moves as you can in the market. And literally on gold, I had 9 trades out of 10 where I was going short, long, 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 short, whatever it was. And I absolutely murdered gold. I've never, ever murdered gold like I did in August. And that was because of prime focus, being strict with when I get up in the morning, being strict with when I look at the charts, sacrificing going out with friends. And that's because I wanted to go super, super hard and make some good money and, you know, really test myself. You don't have to sacrifice your family and your friends and your leisurely activities and gym and all that kind of stuff to make profit from, you know, these systems that I'm showing you and this way of breaking charts down. It's all about how precise you want to be. Overall, long term, if you do stick with again the same mechanisms, I've had this set up for a good like most of the year now, about January, and I just refined it slightly as time went by. It's in my head. I don't need to deviate from this setup. I don't need to deviate from this chart structure. I've got it now. And my mind has been attuned to reading this to such a good degree. See here we also got 1 drive, 2 drive, 3 drive collapse. Boom, boom. Similar to, what was it here on gold? 1 second. Yeah, my mind has been attuned to this. So it's when, like, again, about habits. Get rid of all of the old stuff. Start to program your mind with the new stuff. And then great things will happen. You start to just spot trades. You say, okay, cool, that looks like long, short. Obviously, you define the risk reward in relation to what you see on the chart. What I'm trying to say is not, okay, there's a buy, there's a sell. Intuitively, you know the market can move from here to here, then here to here, because you've seen it so many fucking times before. And it makes your life easier. When I do my chart work, it takes me, what, 15 minutes in the morning, if that, but I choose to sit at the computer. I find something else to do online. I find, you know, I find the time to merge it with other things, family, general housework, gym. I have my time from 5 a.m. till 12. I don't want anybody to really get in touch with me unless it's super important. Then afterwards, for the rest of the day, I'm free and I monitor trades off my phone. So that's more or less what sterling is looking like for me at the moment, and we will be getting back to this. And again, with the daily, it's just kind of like hanging in midair. There's not really too much going on, but what I will be mindful of, I won't draw a line there. It's where the crosshair comes in. I'll be mindful of that level where the bodies are. And that's where it's testing into 1.2425. That could be a minor area of support which is needed to give us that little boost because we are in consolidation. Remember, this is a small consolidation phase from the body to the body. If you wanted to be smart about it, you could go, oh shit, okay, cool, consolidation. What can happen here now? Think about price, behavior. Boom, boom, okay? Don't just be jumping in trades left, right, and center. Look at the finer details. And this is what I'm trying to provide everybody with, is the art of knowing and acknowledging fine details, breaking down charts so we can only really set our mind to just focus on this area here. You don't need to look at like God knows how many months back. As I say, level to level, level to level. But when you do this and you remove the colors and some of the obstacles in your way, you can actually see, okay, lows to highs. So even just a trick of using the daily bodies and not the wicks for levels. Yeah, 4 hourly, it's different structure. Hourly, it's a different structure. And you'll see that all of these different structures combined, man, it provides a solid, rule-based, thought-provoking analysis and potential trade setups which you can rely on. So again, over here we have the body, and then we have this breakthrough, little pin bar there, little doji. So we can maybe come back and then down. I prefer that setup down and then back up. So one, okay, wave, 1, 2, breakdown into 1.23, rebound, following the overall trend, back to the upside, knowing that 1.2 has been spiked into and there's still money, because what happens is the institutions have medium-term targets, monthly, bi-monthly, quarterly, and obviously by the end of year. So money is still flowing through the market at the moment. It doesn't mean that it's not going to retrace and we can't make money as an intraday trader or intra-week. Okay, we can go both directions as long as we're smart about it and we're reading the charts proficiently in a precise and confident manner. All right, so hopefully so far you're picking a few things up. Feedback is always welcome through Astro site, through email, through my Instagram. Yeah, I've got a lot more to come. Don't worry, I've got a lot more to come. Right, so that's GU in a nutshell. Let's get back to this afterwards. Right, let's go into USD CAD because it's annoying me that it hasn't fallen yet. I've been in this trade for fucking, I don't even know, 3 weeks. 3 weeks. But I know it's going to come down and break and give us a nice 1.3. Alright, so daily, all we really have to do on here is, right, it's quite, looking at that, it's quite straightforward. My mind is fixated on body, 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 whatever it may be. So let's have a little play around. Horizontal ray, body. You can see today's candle, right? Today's candle, yesterday's candle, they're testing, not yesterday's candle, so that's Friday, Thursday, Wednesday. So Wednesday, Thursday have made the peak and the high. The spikes of that, let me zoom in for you so you can understand this. The spikes have gone through 3-3. Look at that, when the crosshair is. 1, 2, 3, 4, 5 motherfucking spikes. So something's happening there. Above, clear cut. That has to go there. That is just obvious. So obvious. And then downside, the only other level I will go for, guys, is this one. Body, body, bang. Rounded bottom, 1.3150. 3-pin pattern, 1, 2, 3. Bullish engulfing, takes out the previous wick. Look how simple this shit is. Alright, so what I'm looking for now is... What I'm looking for? A rollover. This could be target 1, this could be target 2. Have your targets in mind. You need to have targets in mind. Again, what I said, prominent high, this could be lower swing high. Orders are being taken. Orders are now getting into the market. I expect drop, 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 drop. Breakdown. I want to see the market make new lows. And yeah, I don't need to draw any other lines on there. This over here, that probably will be my next one. To tell you the truth there. Okay, cool. And that's it. That's my dailies done. What else can I recognize on here? So I can recognize. So what happened is, if I go ahead and place the fib from A down to B, wick to wick, you can see that from this retracement, there's all kinds of retracements going on. But again, it doesn't matter what it's done. Like weeks and weeks and weeks ago, align our focus to the last 2 weeks, 3 weeks max. When we get to the 4 hour, we're looking at last 2 week cycle. That's it. And then, are we still in a cycle? Are we making a new cycle? That is all to come. However, now, daily, all we need to go in and suggest is trend line. Sorry, I'll just put the arrow on here for a second. We have fulfilled 61.8 to the T, and then we're going to boom. There's target 1. Oh, sorry, we know that we can stall here. However, if we align the fib on there, this retracement, choppy ass retracement, you know, the overall down move, because it is bearish and it's kind of building up, ready to just slam. I do believe that is going to happen here. That is what I'm looking for. So by me aligning the fib on top and placing the Fibonacci as a fib lesson, obviously in the toolbox, I will go into fib more so. But I only use fib on daily, 4 hour, hourly. Daily, 4 hour, hourly. Don't be putting fib on weeklies anymore, and monthlies and quarterlies and stuff like that. It's just not too reliable. So I have my trajectory here, my price, process, and the potential progression of where this thing can go. Now, 22 minutes into the video. Oh, my eyes. All right, so this low needs to be taken out just to follow the overall structure as to what's happening here. How many pips is that? So we have current price 1.3267 going into 1.3, so 267 pips. You know, target 1, target 2, and so on and so forth. But I just fling the Fibonacci on there just for suggestion, and it worked out pretty well. But that's how the levels will go, guys. That's how the levels will go, and you will see again if you stick to the rules: bodies, 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 near enough so. You'll see how accurate these are. Prominent points. Okay. The reason I can get these so accurate is because, again, I'm aligning myself with previous price action, where the wicks have been, what psychological levels are nearby, where money's being picked up, where money's being dropped off, where money's being picked up, where money's being dropped off, where money's being picked up. Is it going to be dropped off here, then here? Who knows? Only price will tell us that over the next few days. I believe so. Okay, wait. Shuffle around a little bit. All right. Any other? Okay, yeah, I was going to go into candles. Sorry. So what is quite important here is we have the breakdown of price, bearish engulfing. This bearish engulfing candle has taken the fucking living daylights out of this whole range. So it's going to be quite hard for price to retrace back up, especially back into this region here, because of the breakdown. And you can see the velocity of that. The momentum is so strong. It's it'd be very inadequate of USD CAD to come back up here, and it would just be a piss take if it did so. So I do suggest, and I do expect, and what I also see is an inside bar. Where's the inside bar? I can see fucking two. Main one, price pushes in. Look at the higher the wick, lower the wick. Go to Astrofx and look at inside bar. Secondary, we have, I'm going to do an actual video on inside bar, and it's going to be probably the next one or the one after, so don't worry. Inside bar, this is the bar that's inside the previous. Wick, 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 wick. A great way to approach inside bars is actually just by boxing the first bar off. And what we can actually see is what's happening is the price, if we go into a lower time frame, so the inside bar was drawn on from here to here, that's the daily, and look at prices accumulating. It's getting ready for a move. So the inside bar is very, very good. Okay, it's very easy to spot breakout, so we can actually wait for the break lower if we want to, or we can find alternative setups. Again, this will all come together for you later on. Here you have the bearish engulfing. You can short that, short tight stop there, wait for the breakdown in price, or maybe even add more positions on the break. There's so many differentials on how we can approach this. It's crazy. But the inside bar on the daily, 4 hourly, spot on. There's one there. Even we have an inside bar within the inside bar. Look at this one, 1, 2. So this tells me that some big move is about to come. We know that it's a lower swing high from here. We know that we're stuck below retest 1, retest 2 of our daily region. And we're also in the inside bar. So again, and we have the fib. There's confluence after confluence. So this is going to be a nice short, I believe. But I'll get into it furthermore down the line. So to complete lesson 4, what did we learn? So far, monthly structure, 3 month, keep an eye on that. Just glance at the monthly 3 month, take notes, annotations. Weekly, 4 levels maximum, using the wick, see what ranges we're in, see where the price can potentially go in terms of near-term areas to take profit, near-term areas to be aware of, because see this point here, because I know it's a weekly level, and I've used that area for the week because I've read price correctly. I'm confident, it gives me further confidence, that as long as we're below that, there is a high chance we're below 1 level, 2 level, 3 levels. We're below 3 levels. So knowing that gives me the confidence that shit, USD CAD has to really give it a big ass push through these levels for this potential short trade, which we're still yet to break down on lower time frames, to be invalidated. Okay, so we've learned quite a lot so far, hopefully. Again, these are just foundations that we need to put in before we get into some of the real good stuff. But yeah, that's the end of lesson 4, 25 minutes, 26 minutes. Let's get into what I'm going to go into next, just to give you a brief breakdown of lesson 5. I've wrote here in my notes, video with all 4 charts up explaining top-down analysis, candle recognition, general price structure, psychological levels, and so on. What I will do in the next one, I will go through that, and I'll go through 3 or 4 of the main candlestick formations to look for. There's like 9 or 10 in the Astro book, but the main candlestick, I think there's like 3 or 4 that I'm going to go through. I'm just going to adjust some notes here to look for and focus on, and the rest is going to be more or less like wick play and trying to get some real pinpoint accurate entries on the hourly, sometimes 4 hourly, but hourly and 15 minute. But once we have the general gist of candlestick formations, and again, we're just refining and cutting things down, we can really translate that and refine our focus into what is going to provide the best risk-reward trade setups, so on and so forth. So yeah, there's that. I'm just going to wing it. I'll just go with it. And after that, lesson 6 is going to be going into the 4-hour markings, and that's quite interesting stuff. And discussing intra-week cycles, liquidity, volume reversal points, and yeah, getting into more of the intraday stuff. All right, so cut this video off now, and let's get started into lesson 5.